Did you know China's electric vehicle sales soared by 120% in 2023? That's incredible growth, but is the party over? Let's get into some of the reasons why the Chinese EV boom might be shifting gears. China's EV industry has become a crowded market, bursting with hopeful manufacturers. Over 90 companies are registered to build electric vehicles in China. That's a staggering number, especially when you consider the global EV market is still relatively young. The real problem is that this abundance of companies has led to a situation where production capacity far outpaces actual sales. Experts estimate that Chinese EV factories can churn out a whopping 20 million electric vehicles annually. That's a lot of cars. To put it in perspective, that's nearly enough EVs to replace every single gasoline-powered car on the road in California, the state with the most registered vehicles in the US. But as of now, China is only selling around 9 million EVs a year. That means factories are operating at less than half capacity. This oversupply is creating a fierce competition among Chinese EV makers. It's kind of like a giant game of musical chairs, but instead of chairs, it's customers. And with so many companies vying for attention, the only way some can stay in the game is by slashing prices. This price war is a double-edged sword. On the one hand, it's great for consumers who can snag a sweet deal on a new EV. But on the other hand, it's squeezing profit margins for these companies. Remember, building electric vehicles isn't cheap. There are raw materials, battery costs, labor, and a whole lot of research and development involved. If companies are constantly dropping prices to stay competitive, it becomes difficult for them to make a healthy profit. So what's the future hold for this crowded EV market? It's likely that we'll see some consolidation. Smaller companies with limited resources may struggle to compete and might be forced to merge with larger players. The ones that survive will need to find ways to differentiate themselves, whether it's through innovative technology, unique design features, or exceptional customer service. What about quality concerns? While affordability is a key selling point, peace of mind is just as important for potential EV buyers. Unfortunately, recent reports have cast a shadow on the quality of some Chinese EVs. These reports detail issues ranging from minor cosmetic blemishes like scratches to more concerning problems like mold found on interiors. There have even been isolated cases, according to a report by JD Power Asia Pacific, where vehicles experienced structural issues, such as warping under the weight of roof racks. While these might seem like isolated incidents, they can be a major turnoff for potential customers, especially those unfamiliar with the brand. One cause for concern is a recent financial injection from the Chinese government. This might seem like a positive at first glance, but it can also be a sign of internal trouble. Typically, a healthy company wouldn't require a government handout to stay afloat. In BYD's case, this financial aid could indicate difficulties meeting sales targets or unexpected production costs. Adding fuel to the fire, BYD's sales figures for the first quarter of 2024 took a significant tumble. They reported selling only around 300,000 EVs, a sharp drop compared to the 526,000 units they sold in the previous quarter. This decline suggests a potential slowdown in demand, even within China's massive domestic market. Another factor to consider is BYD's heavy reliance on the Chinese market. While China boasts the world's second-largest population, it also has a fiercely competitive EV landscape. With over 90 registered EV makers in China, BYD faces stiff competition from both established players and hungry newcomers. This saturation makes it difficult for any single company to dominate the market. BYD's dreams of international expansion are also facing hurdles. The recent imposition of tariffs on Chinese EVs by the US and Europe has thrown a wrench into their plans. These tariffs make it significantly more expensive to export Chinese EVs to these lucrative markets, putting BYD at a disadvantage compared to local and established automakers. The future of BYD and other Chinese EV companies with similar strategies will depend on their ability to adapt to these changing circumstances. They'll need to diversify their markets, focus on innovation to stand out from the crowd, and potentially explore strategic partnerships to navigate the complexities of international trade. The Chinese EV industry is grappling with a trust deficit. Some companies have been accused of manipulating financial data to create an illusion of stronger performance. This lack of transparency has led to lawsuits from investors and a general sense of unease in the market. Investors rely on accurate financial information to make informed decisions. Unfortunately, some Chinese EV companies have been accused of inflating sales figures or downplaying production cost to paint a rosier financial picture. This can involve tactics like misrepresenting pre-orders as actual sales or omitting key expenses. A recent case in point is Li Auto, a once promising EV startup. The company faced a lawsuit from US investors who alleged Li Auto overstated demand for its Li Mega minivan. This resulted in a significant drop in Li Auto's stock price as investors lost faith in the accuracy of the company's financial reports. Li Auto isn't an isolated incident. A 2023 report by Viceroy Research, a short seller research firm, raised concerns about a significant portion of Chinese companies listed on US stock exchanges potentially engaging in accounting fraud. While the report doesn't specify how many EV companies are involved, it casts a shadow over the entire industry. The consequences of these actions are severe. When trust erodes, investors become hesitant to invest in Chinese EV companies. This lack of access to capital can stifle growth and innovation, hindering the industry's long-term development. To regain investor confidence, Chinese EV companies need to prioritize transparency and accountability. This means implementing stricter internal controls on financial reporting, undergoing independent audits by reputable firms, and adhering to the highest international accounting standards. Only by rebuilding trust can the Chinese EV industry attract the investment it needs to thrive in the competitive global market. The once white-hot growth of China's EV industry appears to be cooling down. Sales figures that were once on a steep upward trajectory are now showing signs of stalling. Companies that were bullish on their future are revising their projections downwards, reflecting a more cautious outlook. When we look at the numbers, in the first quarter of 2024, China sold around 9 million EVs. While this might seem like a significant figure, it represents a slowdown compared to the previous year's growth rates. Analysts predict that overall sales for 2024 might not reach the heights that were previously anticipated. Several factors are contributing to this stagnation. One is the price war we mentioned earlier. With so many companies competing for a limited pool of buyers, aggressive discounting has become the norm. While this might benefit consumers in the short term, it can eat into profit margins and hinder long-term investment in research and development. Another factor is the saturation of the Chinese domestic market. Remember, China has a massive population, but it also has a limited number of potential EV buyers. With over 90 EV makers vying for attention, the market might be reaching a point where there are simply too many options for consumers to choose from. So what does this mean for the future? The coming months will likely see a period of consolidation in the industry. Smaller companies with limited resources may struggle to compete and could be forced to merge with larger players. The ones that survive will need to find ways to differentiate themselves, whether it's through cutting-edge technology, superior customer service, or a strategic focus on expanding into new markets beyond China. What do you guys think about Chinese EVs? Share your thoughts in the comments below. For more awesome content, like this video, subscribe to our channel, and hit that notification bell so you never miss an upload.